If you're new to the house hunting game, it can be a little intimidating to not completely understand what the ideal mortgage borrower looks like to mortgage lenders and underwriters. Since the mortgage process can be one of the most confusing and stressful aspects of buying a home, let's look at what some lenders might characterize as an ideal mortgage borrower for tips that you can use to make your own case stronger. Job stability of 2 or more years. Holding a job for an extended period of time shows the lender that your finances are stable, giving them confidence that you'll be able to pay your mortgage month to month. Having at least 24 months of employment verification is needed to help the lender calculate income and truly evaluate that stability. Switching jobs right before you start the home buying process or just before closing has the potential to delay or even result in denial of your home loan. So contact me as your loan officer to see your options if you've recently transitioned to a new position and are looking to buy a home. Low debt to income ratio. The debt to income ratio determines the projected ability to pay back those debts. For example, if a person makes $60,000 a year and has a car payment, car insurance, and student loans, their debt to income ratio would be different from a person who makes the same but maybe has no debt. Debt to income ratio of less than 20% is viewed as very desirable by many lenders. Although the average buyers don't have low DTIs like that, they're usually much higher, but it's still not impossible for them to get a home. Some lenders go as high as 50% DTI, but with major contributing factors like healthy reserves or a very high income. Credit card capacity. Generally, having 2 credit card balances at half of their limits is better than having 1 credit card that's maxed out. Most creditors benchmark 30% utilization on revolving credit card accounts. Sticking to this rule can help your credit build faster. The lower the utilization, the better. Down payment or equity of 20%. For a conventional loan, a minimum of 20% equity in your property may get you a better refinance interest rate. And on a purchase, that means making a 20% down payment on your home. If you're not able or willing to pay 20% down, you may still qualify for an FHA loan with a minimum of 3.5% down. However, you might also have a higher interest rate and mortgage insurance on top of that. An exception to this is the VA loan, of course, which requires no down payment, but it has the lowest rates in comparison to other loan types, even with no down payment. Excellent credit score. Credit score is an indicator of how risky lending money to a client is. The higher the credit score, the lower the risk. For example, if you have a credit score of 620, you might still be able to get a loan, but you may also have a higher interest rate. 740 plus scores constitute an excellent credit score from a bureau like Experian. Proper documentation. Submitting proper documentation can speed up the entire home loan process. These forms of documentation include income verification, asset verification, debt verification, and property verification. In addition to these documents, ensure that your driver's license is accurate and valid. You may not be able to sign closing documents without presenting a valid driver's license, passport, or equivalent proof of identity. So check your license at least 30 days before you think you're going in to sign closing documents, in case you have to take an unexpected trip to the Department of Motor Vehicles. Lastly, let's look at timeliness in response. To close a home loan on the projected date, it's ideal that the client responds within 24 to 48 hours, preferably less, to an email, call, or request from their lender. If the lender is asking the client to sign purchase and sales agreement and the client takes a week to get back to him, the client is holding up the entire process. Chances are the client is not the only party needing to sign the document, and by not responding, it could delay your home closing and your date. Throughout this process, I'll be in communication with not only you, the buyer, but your realtor, title companies, underwriters, loan processors, insurance companies, and any other person involved in the transaction. There's a lot of moving parts. But let's talk, and whether you think you're an ideal mortgage borrower or not, let me be your mortgage lending expert. I will be happy to discuss your home buying goals and needs and help you lay out a path that will help you get to the closing table.